Hello everyone, welcome to this next session in which we would be covering the recent GST changes overhaul that has been done. This video is being presented by Wisdomitra, your friend in pursuit of wisdom. Wisdomitra is an institute that has been recently started by alumni of NIT, AMS, etc. And we are attempting to create a holistic experience for students in terms of providing an end-to-end understanding of concepts rather than just the facts. Let us try and understand what do we have to cover today. What are the latest changes in GST that has been done? And then after covering that aspect, I wanted to explain in terms of the origins of GST, how's GST Council functioning, etc. Let us first look into the recent changes that have happened. So if you see over here, GST has been altered, changed, and most of the different slabs that were there, the GST tax slabs that were there, they have been changed to only two slabs, 5% and 18%. And you can look over here, say essential products, grocery related, say for example soaps, etc. They were previously taxed at 18% of their price. Now they are taxed at 5%. Similarly, dairy products, they have been reduced to 5%, so on and so forth. And if you consider, for example, automobiles, this is one important category because the numbers here would be very high in terms of the difference. So, if you are purchasing a car worth of 10 lakh rupees, then approximately 2.8 lakh rupees used to go in terms of taxes. So that car worth 10 lakh rupees used to cost you 12.8 lakhs, and that's going to be reduced to 18%, which means a small car which is of less than 1200 cc. Now, if you're purchasing it for say 10 lakhs, it's going to cost you 11 lakhs 80,000 instead of 12 lakh 80,000. This is going to make a big difference for people who are purchasing automobile, etc. Similarly, for stationery, the taxes have been reduced to zero, so on and so forth. Only one category that I was able to find during my understanding and research that has got some increase, and this is like delivery by e-commerce operators. So basically, if you're sitting at home and getting deliveries, that might get slightly costlier, but otherwise most of the other things have gone cheaper. Let us see a few news clippings that I have picked up here. So for example, FMCG plans companies are going to pass on GST cuts. That's what they have said. That means things are going to get cheaper for the customers with this change. Like now, all the products have got into only two tax slabs, 5% and 18%. Though there are a few products that are being put in the category of sin goods, for example, cigarettes, etc., which will be going to be taxed at 40%. But that's a rare case. Apart from those two, everything those things, everything else is going to come into the two slab system. So, for example, restaurants, hotels, they get tax cut, but no input tax rate. I'll come to input tax rate, but this is slightly a negative news for restaurants, which they are commenting about. But yeah, it's a thing that they also get a tax cut. MSMEs are going to get benefit from cheaper imports, easier compliance, etc. Food and grocery delivery may get slightly dearer with hike in GST and platform fees. So that's just now I mentioned the same thing as well. So all in all, this seems to be a positive change. The taxes are going to get reduced for customers, and that's going to help them get better deals in terms of prices. That's what it is about. Now let us look a bit deeper in terms of like what is GST. How is it different from VAT? And for example, who frames laws of GST, etc. First, about the laws, how they are framed. So, GST Council is the authority that takes care of framing the percentages of tax slabs, etc. And this GST Council has been formed under Article 279A, right? Uh, and its members would be as follows. This council is always headed by Union's finance minister. So as of now, it's Nirmala Sitharaman, Honorable Finance Minister, who heads it. right? And then Union Minister of State, if there is any, in charge of revenue or finance, will also be a member for sure. So if there is any, Union Minister of State, which is taking care of any of these two portfolios, revenue or finance, he will or she will also be part of this GST Council. Similarly, all the states are going to provide one member, either, and in almost all the cases, State Minister for Finance, who's responsible for this particular, membership. So they would be taking part in all the GST Council meetings, or a nominated person by the Chief Minister of that state. That person would be member of GST Council. Permanent invitee, chairman of Central Board of Indirect Taxes will always be a member by virtue of his position or her position. And ex officio secretary is going to be Union Revenue Secretary from Minister of Finance. So basically, these two are bureaucrats, IS officers, IRS officers, etc., who would be part of this council. But apart from this, it would be member of parliaments or member of legislative assemblies who would be members of GST Council, and they would be taking decision about tax slabs, the what and how of GST, how it functions. A few pointers about functioning. Most important point is the quorum is, at least half of the total members of GST Council should be present. Number one. And then central government holds one third of voting power in all these GST council decisions. So remaining two third is distributed between all the states put together. So like central government alone holds one third power. And for any decision to pass, three-fourth majority is always required. So like if 75% of voting is in favor of something, only then it gets passed, out of which one third is always with the central government. So this is a brief about the working and functioning of GST Council. Let us delve a bit deeper into uh, what is GST in terms of like how it's different from VAT, etc., and what is input tax credit. So coming over here, GST, how is it different from VAT? The one and most important point is it's a multi-stage destination-based tax. What it means is that it's meant to be refunded to all parties at various stages of production other than final consumer. And it's a destination-based tax. That means it is collected only from the point of consumption and not point of origin like previous taxes. Let us take an example and understand what's meant by that. So just imagine this, a chain of production that's happening. So, a company that manufactures steel, let's say produced iron ingots or steel ingots that are meant for, doors of say cars. Okay. These ingots get converted into sheet by next company. This ingots get converted into door by next company. And these ingots get, these doors get converted and assembled into a car door by next company and then taken by a consumer. So let us think or consider that company number two kind of pays 1,000 rupees for purchasing these ingots, and then company three. So like let me name them: one, two, three, four. So like company 3 pays 5,000, company 4 pays 10,000 for the door, and the end customer pays 20,000 for that particular door, for example. Now, if you consider VAT, and let us say there is only, say, this is the case of VAT I'm talking about, and suppose there is 5% to VAT. Just for the sake of, ease of calculation, I'm taking a simpler number of 5%. And let us see here. So that means this company, when it buys from its supplier, is going to pay a VAT of, uh, you know, 10% of 1,000 is going to be 100 and 5% is going to be 50. So basically, it's going to pay 50 rupees, right, via this supplier. And then when it sells, this company is going to pay a tax of 5% again. So basically, 250 rupees via this. So this company 250. and this company is going to pay a tax of 50%. 5% is nothing but 500 rupees via this company, right? So here comes 500 rupees, and this particular customer is going to pay a tax via this company. So customer usually doesn't pay directly, so this arrow is invalid actually. Yeah, you don't consider this arrow, but customer pays to supplier. So whenever you buy something, it says inclusive of all taxes. So whenever you get that product, it means some of that amount is going to go to the government. So like this 20,000 that customer pays 2,000, sorry, 1,000 is going to become the tax, right? So this becomes 1,000, right? So basically, when in case of 5% VAT, 1,500, 1,500, 1,500, and 1,750 and 50, that is 1,800 is going to go as tax in case of VAT. Okay, right? When you have a VAT of 5%. Okay, now let us see how GST works. Before going into that, over here you have to understand that these companies VATs were like state, government's purview. So basically, each state had its own VAT percentage. So some states had, say, 10%, some at 5%, some at 15%, or slightly above or below. And this in turn meant that companies had to keep thinking about where do they open their, workshops, where do they open their manufacturing locations so that they can avoid taxes. And that in turn meant a lot of travel, a lot of distance movement between, locations, and between each and every state there used to be again checkpoints where you used to pay taxes or get checked, right? That thing has gone out after GST, because GST is destination based tax. So for example, this is a news clipping that I've taken from 2017, an older news, but kind of drives the point home that interstate checkposts have gone. Unified tax regime has obviated the need of interstate checkposts, and that in turn meant about 20% travel time reduction. This again is a big saving for companies. When you reduce travel time between locations, manufacturing locations, that means you can ask for your suppliers to supply something really quickly, so there won't be any stops in between, and things can come to your factory really quickly. That means you can operate at a smaller inventory margin. So like whenever there is a need urgently, you can call for products without keeping a lot of products at your location, so you can have a smaller factory and still run with it. So that was the factor or the difference. Let us now understand about how GST works. So if you see in this case, let us consider the same example, and here we have considered the GST percentage of, again, say 5%, right? So now this company is going to pay 5%, that means 50 rupees via this company. And next step, at this point of time, whenever it is going to pay the tax being collected from its customer, so now from this customer is going to collect 250 rupees, right? What this company would say in the case of GST is that I have already paid 50 rupees via AA1. So, like when I get this invoice, when I'm paying the tax via my supplier, I say I have paid this. I got a number GST and AA2, and you can check that I through me already 50 rupees have been paid. So instead of paying 250, I'm going to pay only 50 have to be subtracted, and I'm going to pay only 200. Right. So now what happens is that the total money that government has received as of now is going to be only 250. Right. 250 and then this 50. So like this 200 and this 50. Okay. And then when this company sells to the next, which has a GSTN number of AA3, and it has purchased in the cost of 5,000 rupees, and the tax that is supposed to pay is going to be, say, where this, right? So, like this, the 10,000, the tax it is supposed to be paying is approximately 500 rupees, right? Not exactly 500 rupees, right? And this 500, which it is going to pay, it would say, I have already paid 250 rupees to my supplier, so I'm not going to pay you 500 complete, I'm going to pay only 250 rupees. So, like, here the government has received 50 from this company, 200 from this company, and only 250 from this company. So let us write this 250 here, right? And then this particular car maker who is going to sell 20,000, that door for 20,000 to the customer, that person is going to pay, say, again 5%, right? That means 1,000 rupees. And this car maker, they would say, I've already paid 500 rupees, so I'm going to pay only 500 more. That means this particular company is going to pay only 500 when it's paying, because 250, 500 it has already paid via its supplier. So all in all, net the total amount that's going to go to the government is going to be 1,500, not the 1,800 that we saw in case of VAT. So in case of GST, sorry, this is not 1,500, this is going to be 1,000, right? So 1,000 instead of 1,800. So that is the difference that is going to come in terms of the overall taxation. So there are three benefits effectively in GST to summarize. The first one is obviously the tax on tax is not going to happen. So in case of VAT, if you remember, at each stage, the tax that has been already paid to the government, on that amount, again, in the next stage, there used to be a tax. And that will be avoided by GST. That has been avoided by GST. The second benefit is, if you see, we have these requirement of like paying input tax credit. So we always need a GST invoice. So if a company is going to purchase something from its supplier, and it has got two options: one, buying it from some informal company, and two, buying it from a GST registered company, a company that has GSTIN, then the company would prefer GSTIN supplier because they need that supplier to provide input tax credit. They have to get the input tax credit via their invoices. So this in turn will enhance the compliance. So the first benefit was avoidance of tax on tax. Second benefit is enhancing the compliance of sales related taxes or indirect taxes. The third benefit is efficiency. How come? As I pointed out earlier, so each state used to have a separate VAT, and at each stage they used to be check post, etc., which has been removed. So now the company is taking decisions in terms of where to keep their plants, manufacturing plants. There's going to be a purely decision about business and very less about tax consideration. So that in turn kind of helps the companies in terms of running their businesses more efficiently rather than focusing only on taxes. Let us conclude by covering a few points about introduction of GST and GST history. It was 101st Constitutional Amendment Act 2016 that introduced GST. And the articles that were changed was 246A, 269A, and 279A. If you guys remember, previously I have just showed this article, 279A for GST Council. So GST Council is effectively a constitutional body, a body that has been recommended by Constitution itself via Amendment 101 in accordance with 279A article. And there have been some changes to the 7th schedule of the Constitution also. And this GST, it has helped in combining many state and central taxes into a single tax. It has helped in unlocking some efficiencies the way I showed in the previous thing. However, petroleum products, alcoholic beverages, and electricity are not yet under GST for now. I hope you guys liked this overview of GST and looking forward to your comments. Thank you.